Okay, so we are currently live now.
Good evening, everyone. Good evening, everyone, and welcome to TechBiz. It's nice to have you again on this episode of TechBiz, and exciting to see you keep faith with us as we host the 95 episode of TechBiz. It's been a journey with us, and so when I see the numbers, I see 95. I'm like, wow, it's been a remarkable journey, and it's exciting to have a consistent team of people from the ecosystem keep faith with us over the last 95 episodes. It spanned over 2.5 years thereabout, and we think we've had the privilege of having amazing people and thought leaders, subject matter experts grace the platform of TechBiz. TechBiz happens to be a platform that is being promoted by Eco Innovation Center. Eco Innovation Center is an incubator and accelerator set up in Lagos to help provide the right handholding and mentorship for startups. We see that as an area where there needs to be a bit more support structure in the ecosystem, and that's what we try to achieve with Eco Innovation Center. Again, Eco Innovation Center is big on civic tech, even as it has a couple of forward areas where we have interest in two sectors where we do most of our work. Civic tech, happens to be one of them, and of course a few other areas, and I'll come back to cover that afterwards. And in the last 95 episodes thereabout, we've had different sessions from strategy to talking about how to grow your products, talking about investment readiness. We've had business model canvas sessions. We've had issues around talent management, protecting your intellectual property, and all subject matter experts have graced the platform to share from their wealth of knowledge and the work they've done over the years. And so should you want to go back to just check on any of the previous 94 episodes of the webinar, I mean, you can just go back to our website, www.ecoicenter.com/webinar. My colleagues will drop it in the chat room, www.ecoicenter.com/webinar, and you'll find all the recordings of all the previous episodes, 94 episodes of TechBiz, as we host the 95th episode. And we're excited about the feedback we keep getting from people who attend the webinar every last Thursday of the month. It's exciting, the kind of insights they get and solutions to solving their everyday problems around managing the business of tech, and of course getting their startups to be able to track and get the right traction. We also have a community. So beyond what we're able to do here, I mean, it's just 1 hour once a month. There's a community where we have most of the subject matter experts we've had grace the platform. We all are together with people in the ecosystem and people in this TechBiz community, where we call the Tech Nation, where we have a Telegram page, we've got a WhatsApp page, and my colleagues also will be dropping the link. So should you want to join the WhatsApp community, you want to join the Telegram community, use the link in the chat room, and we'll be more than excited. The essence is this allows us to take the conversation further beyond the conversation in which we're having within this 1 hour, because 15 minutes to have question and answer is never sufficient for some of the questions we have that requires quite a number of context in them. And today, again, it's exciting to have us because we, again, have someone who knows our onions about what she'll be speaking about. And the seminar today, again, is navigating the startup funding ecosystem from bootstrapping to venture capital, okay? And I'm sure this relates to quite a number of people. The environment in the last couple of months with the investment winter, with all the uncertainties we see quite a number of equity investors who would, I mean, the equity funds begin to turn into debt, offering debt instead of equity investments, and all manners of blended things coming out there. But we have an expert who has done tremendous work around early stage investment and has had tremendous amount of success recorded over her years working in this area, and she will be doing justice to this today. And so my speaker today, or my panelist today, is she's an investor. Interestingly, she's a conservationist, and I think I like that about her, so that it's not just a commercial thing, it's also about getting around it, making sure that you tick all the boxes that makes her create value beyond just getting the numbers and providing funds for people. She's also a philanthropic advisor and a social entrepreneur. Okay, she's a partner at Ingressive Capital, and I think quite a number of us are familiar with Ingressive Capital, and it's an African-focused early-stage venture capital firm where she has worked with leading institutions for over a decade. So every time we tell you we want people who understand what it takes to do justice to these topics, we come with people who have done it, who have the track record, who can talk authoritatively about these things. And she's done it for over a year, where she's supported large-scale growth and development on the continent. My guest for today has a network of high network individuals and innovators, to whom she helps to collaborate in solving complex problems, especially social problems and environmental problems and challenges. She has managed multi-million-dollar funds and has served on the board of different organizations, including Harmbins, supporting the growth of tech-enabled ventures, such as Andela, Flutterwave, and Yoko. She has been named as one of Africa's most influential conservation leaders and was selected as one of the 15 innovators for the Beyond Tourism Challenge by the Luke Hoffman Institute, WWF, and also Allo School of Wildlife Conservation. So ladies and gentlemen, I know we're excited. I see people trying to log in, and I see the waiting room full. I'm sure we're all excited to get to meet her. So I want to bring on my guest for this evening. Join me to welcome Nella Duke Ekpeyong to the platform this evening. Beautiful Nella, nice to connect with you, and thanks for honoring the invitation. I wanted to share from your wealth of experience gathered over the years with our community. Thank you very much, Nella. You have the floor to share. And I'm taking out my notebook myself. I will be scribbling because I'm sure there'll be, putting all you've done over the years in 30 minutes, I'm sure you'll be going at the speed of light, and it will take someone really, really getting to scribble all this to be able to keep track with you. Let me not distract you anymore. Nella, you've got the floor. Thank you.
Thank you. Thank you so much, Victor. I really appreciate it. Thank you to the Tech Biz community. Thank you to everyone who's joined us here today against your various platforms. I really appreciate you taking this evening to be with us here. And I think, just to piggyback off of what Victor just shared, that yes, those things do exist. Yes, I am also a very passionate conservationist. But when looking at venture capital, or when looking at funding in Africa, I think you're going to see that there's a trend that I'm going to follow, which is an ecosystem approach, which is what needs to happen in Africa for us to really reach our full potential. Before I go into my presentation, I don't know how many of you are familiar with the book Prosperity Paradox. Let me check the chat if anyone knows. But if you're not, you really should give it a read. Prosperity Paradox was co-authored by Professor Clayton Christensen, as well as a gentleman called Enfosa Onjumbo. He's a Nigerian fellow. And Professor Clayton Christensen was a professor at Harvard, and he was said to be the professor of disruptive innovation. And what that book tells us is that there are different types of innovation, but the type that's going to take Africa from a place of poverty to prosperity is the type of innovation that focuses on not just the 80 million Africans who are in the middle class, but rather the 800 million Africans that are currently being underserved. So serving the underserved is one of the pinpoints of being able to scale and being able to reach global markets. So that's just something I wanted to keep in the back of everyone's head as I go through my presentation. Could we go to the next slide? So yeah, this is just a brief snapshot about me, but Victor did it better than this slide does. So on the next slide, I think we'll talk about the funding landscape in Africa. These are just high level. Bear in mind, again, we only have 30 minutes and I don't want to go over time. But this year, Africa has continued to be an outlier in global investments, in the global investment landscape. I'm going to speak mostly to 2022, simply because the data has not come in for 2023. And in the first half of 2022, we saw a close of $3.5 billion coming into the continent. And this was unprecedented. And it was projected that at the end of the year, we would receive $7 billion. But obviously, we know after March how that happened. The macroeconomic situation wasn't favorable, and that impacted every single market. So that slowed, and we raised over, as a continent, we raised over 5 billion. And I just put these other two data points there for you guys to see roughly like the average size, the average deal size when it came to venture capital, and that being in Africa, as well as the increased need for women founders. And I'll speak about this a bit later, but there are a lot of venture capital firms, private equity firms, and even accelerators are looking to increase female involvement. And as a woman myself, I have to stand on the jukebox and sing that sweet song, but they're trying to increase female involvement in entrepreneurship. And I know Africa is actually one of the pioneering continents for women in business, even though we have one of the smallest fragments when it comes to funding. But in addition to, when looking at a snapshot of the funding landscape of Africa, we also have governments. We know that doing business in Africa is not easy. I think any one of you who've tried it will probably have firsthand experience that going from country to country or trying to scale is a Herculean task. And if you've done it, congratulations. But there are a lot of roadblocks when it comes to doing business in Africa, not just within your own country, but also when going across borders. But what we have is that there's a trend of governments, including Kenya, Nigeria, Central Africa, so Congo and a few others, I think Cameroon is also included, Egypt, who have created these startup acts. And the purpose of these acts are to provide a framework to encourage growth and sustainable technological development and entrepreneurship employment on the continent. But in addition to is to create a more favorable environment for innovation, as well as attract African talents. I think everyone has heard about Japa syndrome, forgive my accent, but to attract African talents and to keep our population at home, and as well keep our capital in the country and on the continent. And so you've heard of, I'm sure most of you have heard of Mauritius being a favorable place to operate business, Zanzibar, Seychelles. So a lot of countries are trying to go out of their way to be an enabling business environment for startups. And this is a very popular trend that we're seeing, and it's very positive to see that our governments and institutions are working in that direction. Is it always successful? Obviously not. Any of us who live on the continents are very well familiar with the issues that still arise from doing business here, but it's good to see that there are very conscious steps in the right directions being made by those in charge. Oh, it says that you can't hear the speaker. Does anyone else have this issue? Okay, for Isaka, I'm just gonna. Okay, I'll still try and speak up a bit just in case it's from my end. Thank you very much for the feedback. And then also just with looking at geographies, I wanted to just show where capital is being pumped into from Western countries and also within the continent itself. You have Nigeria coming in, as we like to call ourselves, the African giants, but coming in at the #1 spot. We received close to $300 million in funding from foreign parties, and then East Africa, Kenya, obviously leading in that realm. And then we have Egypt from North Africa, and then Southern Africa, of course, we had South Africa. So that just again shows you where the innovation lies on the continent and where money is being funneled into. And this is very good to track. It's also very positive because we're able to understand, we're able to look at these different geographies and try and peel back the layers and peel back the layers to understand from a data standpoint, what are these enabling factors to make these people so entrepreneurial? I think for Nigeria, we know that necessity is the mother of all invention. So that is part of the reason why Nigerians are so entrepreneurial, because traditionally a lot of people are able to sustain themselves from one job. But unfortunately, that's not the case in many African nations, and which then breeds the need for entrepreneurial endeavors. And that's what you see across these 4 countries. So if we go to the next slide, I just wanted to highlight funding options. Before I go into funding options, I think it's venture capital seems to be the buzz these days. And fortunately or unfortunately, it's becoming more saturated. There's a lot more funding that needs to go into a lot of entrepreneurial endeavors. But the truth is that it's not the end all or be all. It's just what's sexy right now. So funding is honestly appropriate for products that have tractions and in large markets, such as Kenya or Egypt, specifically Cairo and Nairobi or Lagos. For the 99% of the companies that don't fit this bill, which is a large number of companies are just simply brick and mortar, or they're selling to more local markets and they don't have the ability to scale. And scaling just means that you're able to go from, you're able to gather more traction. And that usually happens with tech-enabled businesses, which is why a lot of companies are involving a tech component to what they do. So for most of the companies that are being founded that don't have this capacity to scale in this way, venture capital or external funding in that way is actually a disaster, and you're digging yourself a hole, because it's not just free money. You still have to, your investors, yes, they may like you, but not that much. They're investing to get something back. And so if you're still at the innovation stage and you're still at the ideation stage, necessity again is the mother of all invention. So if you're able to also demonstrate strong creativity, that is where you're able to understand your need to scale. And so not everyone needs to access venture capital. So I just wanted to preface that before going to these options. So the first one I highlighted was angel investments, which is, I think the name is quite self-explanatory, which is essentially friends and families or people who are within your network who are willing to invest at the seed or pre-seed stage, which are the earlier stages of your venture. And this is actually a very favorable option. It may not seem as flashy to some, but if you look at the big startups like Uber and even Google, they started because of angel investments out of Silicon Valley. And then as well, you have venture capital, which provides, which is my wheelhouse of expertise. And we provide capital to startups at the early stage and to emerging companies that show high growth potential. So venture capital starts from pre-seed and seed, and then it goes into Series A. And a Series A usually takes place between $15 to $30 million, with the average check size being about $10 million. Then you have Series B, which then focuses on growth stage equity, which is $30 to $60 million. And then finally, Series C and beyond. So Andela is now Series E, Series F. Andela has gone way beyond all of this, and they're in a position as to, their questions are between IPO or acquisition. And mostly when companies get to Series C and beyond, that's when acquisition possibilities become quite high. So if you're looking at an acquisition like Paystack, I think everyone, I'm not sure where everyone is from, but I'm assuming you have a strong Nigerian focused audience. Paystack, I'm assuming everyone also has used, but they were acquired by a company called Stripe. It's an American company, and they're also related to Google. So essentially, Google was able to come in that way and invest. And then you also have loans. Loans is a form of debt incurred by an individual or an entity. And this is actually one of the, sometimes, depending on the type of business you have, this can be one of the more popular funding options, simply because there are fewer strings attached, shorter payment periods, and in some cases, very low interest rates. So even though loans may not be, private equity, venture capital, it's tried and tested, and a lot of businesses have used it to scale who are extremely successful. And then finally, looking at other options, because it's important not to box yourself in, because some people don't have the network to do the angel investments, and some people don't have the, haven't been able to even do a proof of concept to attract venture capital as well as loans. But the other options include bootstrapping. You're able to, bootstrapping essentially is, supporting it yourself, getting an extra job, or doing what you have to do to make your business run. Strategic partners, incubators, debt, grants, crowdfunding. I'll give an example of crowdfunding. There's a company called Crowdfunder in the UK. It's a equity-based crowdfunding platform that makes it easier for businesses to raise capital to the masses. So that way you can register your business on the website and advertise it, and then anyone can go and invest in your company. And I think there's a small 5% fee. There's a small 5% fee, but that's a small fee considering what you'd be able to get from funding in that way. And then finally, and this is actually one of my favorite types of funding. It's not written here, but it's product pre-sales. So for say, if you had, let's say, a lip gloss, and that was your business, you're trying to sell lip glosses, instead of trying to get capital to produce the lip gloss, what you can do is that you can just get a visual artist to produce what the lip gloss will actually look like, or maybe just get a prototype and maybe make a YouTube video. And then from there, you can put the item on sale and say that, it will launch in 3 months, go heavy on the marketing, have people pre-order, and then you have the capital to then go and produce the items to sell them. So there are many different ways to skin a cat. Long story short, there are many different ways to fundraise and get funding towards your projects. So in the next slide, what do investors look for? This is a question I get quite a bit. Again, this is my venture capital hat on, so it might be skewed more in that direction. If anyone has any questions towards the other rounds of the other types of fundraising, please ask me at the end, and I'll be happy to answer to the best of my abilities. But I split it into 2 columns. Investors look for 1, strong ventures, 2, strong founders. So part of the last role I had before becoming a partner at Ingressive Capital was at a company called Harambians. And Harambians, what they do is that they work to support entrepreneurs who are essentially market creating innovators, growing and scaling their businesses. And to give you an idea or a snapshot as to how good we were at picking entrepreneurs, out of the 12 unicorn founders on the continent today, we were able to select 3 of them. And this was before, so if you take Ian Boyeji for an example, who founded Andela, Flutterwave. Yeah, who founded Andela and Flutterwave. We selected him when his company was still called Project Cheetah, and Andela did not exist. So, but we were able to identify that he was a strong founder. And essentially, if you find a strong founder, they will eventually succeed. So you have some venture capitalists that think in that way, that they're looking for the right founders. And then you have some others who are looking for the right ventures, but most are looking for a combination of both. Because if you have a great venture with a mediocre founder, it's not going to go anywhere. So looking at the venture, you need a strong business plan. You need product market fit, a good market size, and visibility, and viability, sorry. And viability just means does your company have a strong solution? Does it have a great market fit? They want to see that you are producing a product that customers are going to buy. And they want to see that if, let's say you're creating an app, they want to see how many people are signing onto the app. They want to make sure that there's a demand for what you're trying to supply. And 42% of all ventures fail because of poor product market fits. So just because you think something is a great idea and you would use it, if 85 to 90% of the population aren't going to use it, it's useless. So which goes back to what I started off saying, which is serving the underserved. And I think, bring it home with the case study I have at the end, but serving the underserved and looking for what people really and truly need, bringing education to those who cannot afford it, bringing healthcare to those who don't have access to it. Those are the things that are going to drive innovation and capital into your business. So having a strong product market fit is one. Market size is also huge. If you saw my representation before, we had Nigeria, we had Kenya, we had Egypt, we had South Africa. Why? Because those market sizes are huge. They are sizable in terms of volume of people, and they also have good penetration for internet. So investors look at these data points to assess if it's worth investing in. So even if you had the greatest venture, but maybe you're based out of, I'm not going to use a Nigerian state because I don't want to bad mouth. Maybe you're based in Zanzibar. There are not that many people in Zanzibar, so it'd be a tough sell, right? And then finally, exit strategy. They want to know that you've thought about the end in mind. So as a venture capitalist and as an investor, we also fundraise for ourselves. So we also have to think with the end in mind. And when we go out there, we have our own exit strategy, the same way we are expecting vendors to have their own exit strategy. So investors want to see a solid return on their investments, which means that you need to have that firm exit strategy in place. So if you're looking to be acquired, if you're looking to IPO, whatever the case may be, that should be worked into your business plan so we can see how we're going to make our money back. Because I've spoken to founders before where I've asked, what's your exit strategy? And they've said, oh, we just want to go with it. We don't want to sell because no one can do it the way we can. That's not how the world works, unfortunately, for most people. For some people, it does. If you're the next Google or next Twitter of Jack Dorsey, those 1 in a million cases, fine. But for most founders, they're going to need a strong exit strategy, and they're also going to need to find investors who could potentially acquire their companies. So if you use the example of Shift Solutions, which was founded by a woman, her name is Ugwa Mineo. A lot of her investments are from GE, Siemens. So she works in the energy space. So she has investors from Google, from Siemens, and she's doing this strategically because these are the kind of people who would be able to eventually acquire her business. So that's what that means, having an exit strategy and starting with an end in mind. When looking at the founder side of things, which is something I really enjoy to do, they're looking for strong leadership. They're looking for, and I put founders with the bracket S to highlight the S. They want multiple founders. They don't just want one. Most people who are investing in companies, and when I said most people, because this also includes angel investors, they don't want to see, and even sometimes on crowdfunding and even in incubators, they don't want to see just one founder. They want to see two, and they want to see a dynamic team, because this brings in different opinions, different problem-solving tactics, different ways of going about it. And they've shown, it's also data-driven. It's just, they have a stronger track record when you have multiple founders and a very solid leadership team. They also want to see advisors if you have them. So if your advisor, if you're building, I don't know, if you're building an electric vehicle and you have the founder of Uber as an advisor, that plays well for you because you have someone who's a titan in the automobile industry and who can support you in that way. So they also want to see experience, so relevant experience, not just that you've had a job, but they want to see relevant experience. They want to see that you have done things that support what you're doing today, and that also includes the connection to the challenge or the opportunity. So if I was creating, for an example, so So if I was creating, actually, this is a real example. So there is a gentleman out of South Africa who created a BB pen for people who have go into anaphylactic shock, and it can also be used for those who have who I think are diabetic. So it can also administer insulin. But his connection to the opportunity is that he's diabetic, and he's had friends who he's lost simply because they weren't able to get an affordable EpiPen. And that's a stronger story because someone who understands the medical system in that way, and not just understands it, but has lived it, as opposed to someone, let's say if I just woke up today and says, I want to start a health tech company, I have virtually no experience or connection to that industry. So it would be a bit of a red flag for investors. I'm not going to lie. It's not that it cannot be done, but it's always better. And also in the long term, it helps you see where the problems are and see how you can really address those solutions if you have a strong connection to the challenge. And last but not least, trust. The founder community is extremely small. The ecosystem is even smaller. So trust is one of the biggest things. That is a currency you cannot afford to lose. When investors are about to invest in your company, the first thing that they do after they get off the call with you is call everyone else who may know you, and they ask, what is this person like? And it's not if they were the first in their class or if they were good at giving presentations and speeches. They ask, what are they like as a human being? And if you are a cheat or you steal or whatever story someone wants to conjure up about you, that may not play well because they wouldn't want to invest capital, support you in this way if they don't feel like they can trust you. And especially when looking at the African entrepreneurial ecosystem, you have to remember that Africa is under a tremendous amount of scrutiny from Western countries. If anyone here has tried to get a visa before, you'll know that it's not an easy pathway. They make us jump through hoops that they don't make other African nations or other global nations do. They are very harsh when judging Africans. And for this reason, that's why trust is so important. And that's why no one is willing to invest in people that they're not going to trust. So that's okay. I see some great questions coming in, but I'll just wrap up here with my case study. Has anyone here used Bolt? You can put a yes or raise your hands. Has anyone here used Bolt before? Okay, yeah. Beautiful, as have I. So Bolt is actually partnered with a company called MaxNG. And I think maybe less of you may have seen like the advertisement of MaxNG, but MaxNG essentially owns Bolt in Nigeria and Ghana and a few other African countries. And what they do is that they're a leading technology-enabled company driven by a mission to solve mobility challenges in Africa. And this company was founded, I think, a little over 5 years ago. So they're relatively young. And they were founded by two young gentlemen called Adetayo Bamiduro, both in their 30s now. So at the time, they're in their early 20s when they founded the company. And Chinedu Azdo. I think I butchered his last name, but I apologize. And these two gentlemen went to MIT together, went to University of Ibadan, and they obviously were engineers and scientifically enabled in that way, and decided to start this mobility company. And when they started in their lab, and they funded themselves. They had asked friends and family to pitch in to support their efforts. And so they started with the bootstrapping method, and which is very common for a lot of companies and ventures that eventually scale. And from there they went into their pre-seed. They went into their pre-seed and they were able to raise good capital, and they kept going at it, and they went into their seed. And then eventually Yamaha, as well as I think it's Yamaha, Global Ventures, Breakthrough Energy Ventures, which is a venture capital firm owned by Bill Gates, caught the traction and decided to support them. And so in their last funding round, I think it's their Series A, I think they're able to raise over $40 million. This is what they're reporting, so it's probably well over $40 million. And this again is just within a 5-year period, which is actually relatively short if you think what can happen in 5 years. And so they went from the bootstrapping to angel investments to venture capital, and now they're at the growth equity stage. And why their connection with Bolt is that they also were able to pivot during this time, because they weren't trying to, so they have two competitors, one being Move and the other is Gokata. If anyone has ever driven in an Uber, that Uber is actually run by a company called Move, if you don't know, and Bolt is actually run by MaxNG. And those are the competitors. But what MaxNG started doing before Uber, I think everyone knows Bolt. I'm not sure about the numbers now, but initially, like a few years back, Bolt was cheaper than Bolt was cheaper than Uber. And they were able to price them down because they were trying to, again, cater to the underserved. They're trying to serve the underserved, and they're trying to, I don't want to use the word help because it's still a for-profit business, but they wanted to make mobility more accessible to a larger demographic of our society. And through that, they were able to expand into 10 cities in Africa, including Ghana, Ivory Coast, I think not Sierra Leone, but at least 10 other cities in West Africa they're able to expand into, and now they're going over to East Africa. And this is something that they were able to foresee that their competitors weren't able to do. And if you look again, they have the recipes that we spoke about earlier, which includes multiple founders. They have a long-standing history together. They have the relevant experience, because aside from MIT, University of Ibadan, they also worked at Conga. They worked at Barclays. They worked at I'm trying to remember the other firm that they worked in. They worked in relevant industries that supported what they're trying to do now when looking at mobility and logistics within the African context. And today, they've been able to do 1 million trips, over 1 million trips through a partnership. So I think in my previous slide, I'd spoken about strategic partnerships. Strategic partnerships is also a very interesting way and a very clever way that people are able to garner, founders are able to garner support. So via a partnership with Jumia, they're able to do 1 million trips through that vertical, which is very impressive. Now, if you see, I also wrote incubators. This is an ecosystem. I keep saying it, but I want to drum it in one more time. This is very much an ecosystem. And what the beautiful thing that incubators do, so going back to the timeline, they bootstrapped angel investments. Alongside angel investments, they were also part of incubators. Then they went into venture capital, and now they're towards the growth equity funding side of things. So they joined incubator programs like Techstars and Legasum Center Fellowship. They're also Harambeans. And what's beautiful about these incubators is that they are a community, and they're able to expose you to other investors within the network, and they're able to give you mentorship and guidance. And I didn't touch on this before, but mentorship is also something that every single entrepreneur should have. Every single founder needs a mentor, because that is the difference between 1 year and 5 years. If you're able to find someone who's done it before, then that cuts your learning curve in half. And that is something that at Harambeans that they really did hammer down, because the African entrepreneurial ecosystem is very much in its infancy. We are still in the crawling stage of things. And whereas in the West, they have a roadmap to get them from stage to stage, we don't have that yet on the continent. So it's important to find people who've done it before. You're not an expert in everything, which is fine, but there's someone out there who is. And if you're able to join incubators, join accelerators, join groups, you're able to pull that collaborative efforts to get to where you're going. There's an Ubuntu saying that goes, if you want to go fast, go alone. If you want to go far, go together. And essentially, my recommendation, again, unless you're an Elon Musk who can go alone, I would strongly recommend going together, and collaborating with your community. And just to give another case study off the top of head of a great innovator that we may not all know, but we definitely all have benefited from. Does anyone know Dr. Mo Ibrahim? Dr. Mo Ibrahim was the founder of Meltel back in the 80s, late 80s, early 90s. And Meltel, Allah Yinken does, thank you. The Meltel, Dr. Mo Ibrahim thought, because he worked in telecommunications in Europe, and he thought that, why can't we have cell phones in Africa? But of course, the West laughed and said, why would these villagers who don't even wear shoes need cell phones? And he was relentless, and he was not perturbed by this. And he thought that instead of having this, because he's from Sudan, instead of having a woman walk, I don't know how many kilometers to go and visit her child from village to village, or wherever the case may be, if she could place a call. And so he set upon this mission to establish telecommunication in Africa. And of course, first they laughed at him. They gave him ridiculous terms that were simply not fair. But he still needed the funding, and he went right ahead with it. And today, the ecosystem that we have for telecommunications and the cell towers that we have on the continent are mostly due to Dr. Mo Ibrahim, one man with a vision. And that again underscores what the prosperity paradox teaches. So again, if you haven't read it, I really recommend it. And if you want to be an entrepreneur on the continent, I really recommend Prosperity Paradox, because he was able to serve the underserved. He was able to do what a lot of people thought were ridiculous and didn't think made sense, but he saw a market. He saw a market that he was able to speak to, and that needed this attention, and he was able to give it. So that I think is the last point I wanted to really make. And thank you so much. I was trying to keep the time.
Yeah, thank you so much, Nella. I think we're all engrossed in your conversation, quite insightful. Again, what I think I enjoyed most about is the fact that it's very hands-on. And that's what excites me about what we do in TechBiz and the kind of guests that we have in here. They're not sharing what they feel, they're telling you what it is in the trenches. And Nella has been in the trenches, and therefore she's speaking to you clearly from a place of knowledge and thought leadership. So Nella, thank you so much for that beautiful session. Again, I keep saying we can't do justice in 30 to 40 minutes. And that's why we like to keep the conversation going, the WhatsApp group and all that. I mean, you can just send a message across, and we'll see how best we can add value. And this particularly has been quite insightful. We've seen quite a lot of changes happen in the funding ecosystem. But what are some of the key takeouts, which I think will help quite a number of people in here? It's about the fact that bootstrapping, old traditional bootstrapping, still works. And it's still relevant. I think people need to understand the importance of demonstrating some track record before we keep jumping. I see so many startups, and rather than spend so much time to build, where we're having valuation proposals and carrying safe documents. I'm talking about, you want to raise a fund for an app you've not built, a platform you're thinking about. You have an idea that is worth $5 million, and again, you need to demonstrate traction. You need to. So I think that was one thing I picked from her, and from the two case studies. It shows some level of optimism, some level of bootstrapping, commitment of the people to want to show proof and results. So it's not just a frenzy Nigerian thing, just run in there, there's money to be thrown, just put some paper together, talk about evaluation. Oh, this is the average valuation in the industry, and therefore we're worth $5 million, and I'm offering 5%. Again, we might need to begin to change that very narrow view about how enterprises or ventures are built. Okay, and she spoke about the team dynamics. We've done, if there's something we're good at doing quite a lot of pre-acceleration work, which means we do quite a lot of hackathons that lead into incubations. And if there's something I've seen that has really derailed quite a number of companies that come up from our hackathons, is this concept around team dynamics, where you see people who are not able to have a chemistry, who are not able to work together. And again, being reinforced by her and so many people, you don't get to have traction without teams. Teams creates that comfort for people to be able to invest in you, to bet on you. There must be team dynamics, complementary and all that. And of course, another major takeout is the fact that we need to make sure we build character and good relationship. I know that's not our strength as Africans, especially Nigerians. We just want to be short-term people, very transactional, get money in here, wind down the company, jump in there. These are things that when people want to, like she said, want to invest in you, want to, get into a strong relationship with you, they want to check you out. They want to be sure who you are. It goes beyond the PowerPoint. It goes beyond the fancy LinkedIn write-ups and all that. When due diligence comes in, people will do due diligence, and they will speak to people, and the people they speak to will give them the real side of the story. So again, we need to be sure that we're doing venture building, we're working on our character, we're working on our competence, we're working on our capacity to make us attractive for funding, irrespective of the kind of funding, whether you're talking about loans or talking about VC funds, angel investing, whatever kind of funding that requires somebody else putting a bet and staking in you, we need to make sure that we have the right boxes checked. And I think that was quite instrumental and a big takeout for me. And thank you. And again, it shows the possibility of Africa. If we're seeing these companies being built, we've seen, like you said, Andela, Flutterwave, you talk about Paystack, you talk about Max.ng and what they're doing. And again, it tells you that these things are possible in 5 years, but people need to do the work. And I think if there's any parting shot from what I got from what she had said, it's more around, there's no shortcut. You've got to do the work. You've got to do the work. You've got to do the work. You've got to be consistent. You've got to be focused. Okay. So let me now get into the questions, and then let's see how many of these we can deal with before the hour. This is really informative. Thank you. So there's a question: starting a tech startup in Lagos will have some challenges and good secrets. Can you share some with us who have infant startups and willing to make it way big in the industry? Okay, I'm not sure. Question 2, starting a tech startup ecosystem in Lagos will have some challenges and good secrets. Can you share some with us which have infant startups and willing to make it way big in the industry? I think this speaks to when you were talking about the importance of location, where, to give example of Zanzibar, talking about population and all that, maybe this is what the person is saying. I want to assume the person is not located in Lagos, and the person is saying, is there some secret juices that makes some ecosystems or some environment more exciting or attractive for investment when they're starting startups? And what are those secret recipes? I want to assume. But if I'm not getting it clearly, the person can just explain more, but let's have Nela share a view on that.
I'm muted. Yes. So when looking, not everyone lives in Lagos, of course, not everyone lives in Nairobi or those bigger markets, but it's trying to understand how you can. So if your target audience, maybe you live in, I don't know, maybe you lived in Calabar or somewhere a bit more remote, and your target audience. And there are a lot of states in Nigeria that have those similar issues that they don't have in Lagos. So mobility is a big one in these rural states. I don't want to insult any one state here, but these rural, I mean, a little less developed, let's say mobility is a big issue that, crosses across, that cuts across state lines. And so you should look, if you're looking to scale, which is not, it's not for everybody, and you can be extremely successful without scaling. If you're looking to scale, Nigeria is a huge country. We have a population of over 200 million people. Not everyone's in Lagos. How do you serve those, let's say 20 million are in Lagos, or 10 million, whatever the numbers are. How do you serve that 180 people throughout the country if you have similar, let's back to logistical issues, if you have similar logistical challenges? How do you create a tech-enabled business that can serve all those people who are currently being underserved? So that's how I would personally look at it.
Yeah. So again, I hope that answers it. It's not just about Lagos. It's about ability to serve a market that can sustain your business. So, one of the things I see often, most times, and I see that as I deal with quite a number of startups, is the fact that there might be a gap in the market. Okay. Oh, I've seen people need healthy foods, and I've seen all manners of wonderful ideas, and we're creative people, and by all means keep pushing that out. There's nobody you see today who is successful who has not had so many of those ideas. So there can be a gap in the market. The problem is there a market in the gap? So is there a huge opportunity? There needs to be opportunity in there. So what makes Lagos, back to what Nella was saying, it's the fact that there's a huge population that seeks convenience, that now brings to fore the problem of urbanization, which is traffic. And therefore, mobility becomes a necessity to improve productivity. And therefore, there is a gap in the market for mobility, but there's also a market in the gap because the people are willing to move, they can pay for it, it can be sustainable, it can be profitable, then it can scale. Remember also I think people also forget that angel investors, VCs, and all of them always want their money back. The safety of their money is key. So it's not grants. They could easily stand on top Milan and throw the money into the ocean if that's how easy it is. So they need to be sure that the money, and of course, Nella is more experienced doing this over 10 years. She needs to be sure her money is going to come back. So for the money to come back, they need to be sure that the business is viable and that there is a market in the gap. It can be sustainable. There must be a business around that. And I think that's what she's trying to say. So for you to make a mobility company, for example, in Calabar, which might not have extensive mobility issues, urbanization issues like Lagos, you might need to scale way beyond Calabar, for example, because when you look at the challenges, the square mile, the number of people per square mile, which is around the population density, it might not make it as exciting for it to be lucrative, the number of viable people in there. So she's saying scaling up adjacent cities, scaling up outside of that might make you as competitive, might make you as exciting, might make you as attractive, might make you as viable as you having to do the same thing in Lagos. And I think that's what Nella was trying to explain. And if you feel we've not dealt well with it, feel free to come back. I think there's another question here about esports. So we have Toluwade, who is a software engineer, and I think the world of gaming and sports and all that is exciting. And Ingressive Capital has done quite a lot. I'm not sure whether you have sector agnostic in terms of investment, but what he says is that what is the outlook for esports startups seeking funding? And do you believe that a startup with over 3,000 members in its community is a viable investment opportunity in this space? So technical advice that normally you should pay for. But again, Nella is the guest today and she's wearing her niceness cap. So she's going to respond to you out of the magnanimity of her heart because these are consultancy questions. But fine, Nella, please, you have the floor.
So I think that there are two parts to this question. So the first part is around funding for gaming ventures. And so Victor is right that Ingressive Capital, we actually have invested in a company called Carry First. They're a South African venture. And when we invested in them, I think their valuation was quite low. And today they're now worth $200 million. And they were backed by, I don't know if you're familiar with the firm, but it's a Silicon-based Valley firm called Andreessen Horowitz. And they are one of the godfathers of Silicon Valley and venture capital in the world. And so that's just to show you that they have a keen interest in the continent. Everyone has an interest in the continent. So don't be fooled by what you hear. A lot of these Western institutions have an interest in the continent. The issue that they face is that they don't know how to enter into Africa. And when a lot of Western companies come into Africa, they don't know how to operate within our markets. So for them, again, the best way forward is acquisition. So an acquisition, the best way to acquire companies is to invest in the company, learn the business, and then acquire said company. So that's the first part. The second part, which I don't know if Victor, you're looking at the question. If
About with 3,000, it's got 3,000 members in an esport company. Is it good for investment? Is it viable enough? Is that the only metrics that is needed? I think that might be how to approach it.
Okay, to show traction. So if it's 3,000, 3,000 is definitely good traction, and it shows an interest. I think you may need the only way I could really answer that is to see the trajectory of that 3,000, and how long has the business been existing for. If you, I don't know, if you launched a month ago and it's 3,000, that's fantastic. If you've been alive for 5 years and it's 3,000, not so great. So we need to see what the market, again, market fit, if people want what you're buying. But 3,000 does sound okay, at least for angel investment, for sure.
Yeah. I mean, so again, I think Nella has created the context. It's way beyond train the numbers of 3,000. The question is, so network effect is important, and network effect is how many people you're able to aggregate and onboard on your platform. But much more than network effect is the stick effect. Are they still engaging? Are they still transacting? So do you have 3,000 people, and the last time any of them did anything was 2 years ago? How many of them are active? Is there a stick effect? Are they coming back? You see, there are quite a number of parameters as we evaluate. I mean, Nella is a subject matter expert, but as evaluations happen and we provide handholding and we provide consultancy services that make you ready for people like Nella to put the funds in you, we need to see a bit more than dropping the numbers of 3,000 people. There just need to be a couple of parameters that you need that makes you right for Nella to even look at your business at all. So saying 3,000 might just not be it. The question is that there needs to be a bit more substance around the data that you're sharing. I know we've got 3 more minutes to go, but I want to take this question, Nella. This again, it's your space. It says, this is really informative. Thank you for the organizers. My question is simple. How do you validate a product? The product has been self-funded for years and is been difficult scaling or breaking even. So this person has got, the scaling challenge and how to scale and accelerate. So she says, person is asking, how do you validate a product? I think the person is looking for seed fund or whatever loan, but you are the expert.
So valuation is tricky. So if you are in the founder space, I'm sure you'd have heard that there was a valuation crash recently in the African market. And they were able to come down to more realistic numbers. So what that means is that companies were valuating themselves at much more than they were actually worth. But then because of the macroeconomic climate, everything started to stabilize. So valuation is always a tricky thing. So even when someone says you're a unicorn, it's just because you've been valued as a unicorn, not because you have $1 billion in the bank. But just to answer your question, is to the best of my ability, you evaluate it based on the investment needed, the forecast of the financials. You're able to calculate what you would be worth at exit, and then also your ownership in it. There are a lot of calculations that actually go into evaluating a venture, and if you do some research online, there's some very good literature on this. But there are different data points that you have to look at. So it's just the forecast, it's your revenue stream, even though you haven't broken even, but it's just you're projecting essentially, right? So you want to understand what your ownership is, exit potential, your revenue stream or potential for said revenue stream, and have you garnered a size of the market that no one else will have access to, that will also affect your valuation. So it's not that easy to answer the valuation question, but there are a few data points I know you can definitely find online to start to calculate those figures.
Yeah. Thank you so much, Nella. Ahmed, I hope that helps. Again, there are times you might need professional advice that might sit in with you, help you put together your data. Because part of what I also see working with startups last couple of years is ability to find out where all our data is, that be able to allow professionals interpret and be able to show you a proper picture of where you are, where you can be, what's possible. So, I mean, yes, there are quite a number of valuation methods that can happen. It's a function of the ecosystem you play in, the industry playing, a couple of things. So I think for that, you might need to send an email to the Eco Innovation team. I can ask that the team drops the email in the chat box. If you can get that, send an email, someone will get across to you and they can take you through the whole opportunity of, share with you and different steps, evaluate on how to evaluate your product, or do evaluation, of your product. And then should you want professional advice, I'm sure they also can be able to handhold you to someone that can help you do that. Or basically just business advice. You take a look at your business and tell you what they think and how to assist. So you can send an email, Victor Bolatito, you can just drop beautiful. So they've dropped an email, just shoot an email and then we can take the conversation outside of here. Again, I do see someone saying, how do I join the WhatsApp group? Can we drop the WhatsApp group link? Can we also drop the Telegram link for the Tech Biz Nation? And again, this is what it is. I mean, if we left Nella, she can, for the next 1 hour, which I enjoy. I mean, she's giving case studies of companies we know. She can give you case studies upon case studies of different companies they've worked on. She's very hands-on, and I'm sure that we will find that quite helpful and engaging. But that's it. There's always something called time, and we need to always respect time. That's one commodity that keeps going, and we're not able to recycle. There's no circular economy around how we can recycle time and reuse it. So time just keeps taken away, and therefore time again is up on this episode of the 95th episode of Tech Biz. But I want to say a special thank you to Nella. Nella, you've done a fantastic job. Quite simple, quite informative, very hands-on. It shows significant depth of knowledge, and especially I like the fact that you brought in case studies that we could relate with. You brought in case studies to explain all the things you were sharing. I think that at times sticks more with us, much more than the things we've shared in this session. And with saying a big thank you. And again, always know that we are a community who will be rooting for you as you continue to soar high and do great work in your career. We will be at the sidelines cheering you on. So thank you very much. We appreciate the sacrifice of your time to put together the slides and to share from your world of experience. Thank you so much, and thanks for having you. And I'm sure everybody on the platform is appreciative, and we all can in the chat, we just give her a round of applause and just give high fives and say thank you to Nella for doing this. So again, thank you everyone that's kept with us today, the final Thursday in the month of February, as we get ready for the elections over the weekend. And we do hope the best man wins, and the best person that will be able to help turn our country around and help the startup ecosystem. But do remember to get your PVCs and do your civic duty by going out to vote. TechBiz is a platform brought to you by Eco Innovation Center, an incubation acceleration center that is located in 50 Awolowo Road in Ikoyi, Lagos. And this is one of the platforms where we seek to fulfill our mission of providing the handholding that is required for startups and founders in the ecosystem by making sure we support companies that use technology to achieve scale and to drive the operation of their businesses. We are big on 5 different areas: renewable energy, market access, media and marketing, healthcare, civic tech, and should you be having any initiatives around this area, please feel free to reach out to Eco Innovation Center. And again, I want to say it's a privilege to have been part of this recording, as well as every other recording you can find on our website, www.ecoicenter.com/webinar. My colleagues are dropping it. So you will find the slides, you will find the live presentations, you see the questions, you see how they were, you listen to how they were answered. And should you have further questions, please feel free to drop them in the WhatsApp group or in the Telegram group, and I promise we'll jump on it quickly. So 12 noon tomorrow, you already have these recordings up, and we do hope that the work we're doing continue to add value and provide the right support to members of the ecosystem. And do try to keep a date with girls again the Thursday of March, the last Thursday of March as we come. I remain Victor Benga-Falabi, the founder of Eco Innovation Center and your host of TechBiz. Thank you for keeping a date, and we do hope to catch up with you next time. Do have a wonderful weekend starting tomorrow. Remember to keep safe and remember to carry out a civic duty by going out to vote. Thank you very much, and do have a